Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tsui Properties Limited interim report. Tsui Properties Limited offers a diverse range of businesses and services across various sectors. The company's primary focus lies in property development, management, and trading, with operations spanning Hong Kong, mainland China, Singapore, and Australia. The company operates through 6 key segments: property sales, where it buys and sells properties; property rental, which involves leasing out properties to tenants; property management and other services, encompassing a wide range of services including cleaning, management, trustee, secretarial, consultancy, administration, deposit placing, financing, and security services. In addition to property-related activities, the company is also involved in hotel operations, investments in securities, and financing. Its property portfolio includes shopping malls, offices, industrial buildings, residential units, and car parks. The company's extensive range of businesses and services reflects its commitment to diversification and expansion across various sectors. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a stock's price to remain stagnant over a period of time. The stability of a company's stock price is often influenced by various market and economic factors. One possible reason for TST Properties' stock price remaining unchanged in the past year could be a lack of significant news or events affecting the company. This could include a stable financial performance, no major changes in management or leadership, and no significant announcements about new projects or developments. Another factor that might contribute to a stagnant stock price is market sentiment. If investors are not confident in the company's future prospects, or if they are waiting for more information before making a decision, it can lead to a lack of buying pressure, resulting in little to no change in the stock price. Additionally, external factors such as changes in interest rates, economic downturns, or shifts in industry trends can also impact a company's stock price. If these factors are not favorable to TST Properties, it could explain why its stock price has remained stagnant over the past year. It is worth noting that a stable stock price does not necessarily indicate a lack of growth potential for the company. It may simply be a reflection of the current market conditions and investor sentiment. Tsui Properties Limited market capitalization of $44 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that Tsui Properties Limited holds a significant advantage in their industry. Tsui Properties Limited trades at a lower price-to-earnings ratio of 18 times and a higher price-to-book ratio of 0.43 times relative within the industry. This suggests a potential market detachment, as Tsui Properties Limited trades at discounted levels while the broader industry remains fairly valued, warranting deeper fundamental analysis. The balance sheet appears very conservative, with liabilities representing only 8% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. Although shareholder equity has increased, the share count has risen while revenue is declining. This raises concerns that equity growth may be driven by dilution rather than business performance. The sustainability of the business model remains unproven. The company have a dividend yield of 2.97%. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the given summary. On the revenue growth side, several factors contributed to the increase in revenue. The sales of residential units in completed projects and the recognition of sales from the reserve residences in Singapore were significant contributors. Additionally, successful appeals of waiver fees, increased office transactions, and commercial properties being converted into student housing also played a role. The strong financial market activity, with 119 IPO listings in 2025, was another key driver of revenue growth. Talent schemes attracting professionals from China and overseas further boosted demand for office space. The national integration initiatives in the GBA and Northern Metropolis also supported office demand. Furthermore, residential leasing performance was driven by an influx of incoming talent and overseas students. The robust IPO fundraising, family office interest, and wealth management expansions also contributed to revenue growth. Sino Land's strong property sales performance, government land tenders won by the company, and expectations of further interest rate cuts all contributed to the increase in revenue. The property sales revenue increased by 112% from 2024 to 2025, while property rental revenue increased by 98%. On the other hand, several factors led to a decline in revenue. A soft retail environment at the beginning of 2025 and pressure on rental reversions due to weak consumer spending were significant contributors. Outbound travel by local residents also led to weekend cross-border spending and outflow in domestic retail activity. The hotel operations revenue decreased by -17% from 2024 to 2025, further contributing to the decline in revenue. The company's financial performance indicates a positive trend in its operating cash flow. As of December 31, 2025, the net cash position stood at HK $51,493 million, suggesting that the company is generating sufficient cash from its operations to cover its expenses and investments. This positive operating cash flow is further supported by the increase in operating cash flow for 2025, which rose by HK $1,108 compared to the previous year. Although depreciation and impairment loss on trade receivables are not directly stated as part of the operating cash flow, they can be inferred as contributing factors to the overall positive trend. Overall, these indicators suggest that the company is successfully generating positive operating cash flow, which is a crucial aspect of its financial health and sustainability. The company's debt level has undergone significant changes. A closer look at the financial statements reveals that non-current liabilities, or long-term loans receivable, have increased substantially from HK $459 million to HK $3,218 million. This indicates a notable rise in the company's long-term debt. On the other hand, current liabilities, which include bank borrowings due within 1 year, have decreased significantly from HK $1,799 million to HK $132 million. This decrease in short-term debt is a contrasting trend to the increase in long-term debt. Overall, these changes suggest that the company's debt profile has shifted towards more long-term obligations. Management is optimistic about the company's outlook due to various factors. The market activity is expected to drive office demand, particularly with government initiatives in place. Additionally, residential leasing performance remains strong, which bodes well for the company's growth prospects. Hong Kong's status as an international hub will also support business expansion. The company's strategy revolves around its Creating Better Lifescapes vision, which focuses on 3 key pillars: green living, innovative design, and community spirit. This approach prioritizes sustainability and environmental, social, and governance (ESG) performance, setting the company apart in the industry. With a strong emphasis on these areas, management is confident that the group will be well-equipped to navigate challenges and capitalize on new opportunities. Overall, management's outlook for the company is positive, driven by its commitment to sustainability and excellence. The company's fundamentals are solid, and with a clear strategy in place, it is poised to capture new opportunities and continue its growth trajectory. That concludes the financial summary for Tsui Properties Limited. Feel free to comment below, and I will be happy to answer them when possible.